All right. Today we'll be talking about risk management, how to use proper risk management in your trading. Now, let me ask you a question. I don't know if this has actually happened to you before. You probably have had times that you have good winning streak. About, okay, you took 6 trades, 6 of those trades come true, and then one particular trade you pick next blows your account or cut almost all your profit off. And then you be like, you begin to blame yourself. And then your psychology gets, and then has it actually happened to you before? Of course it has. You will agree with me that it has, right? And the truth is that this is not actually about your technical abilities, right? You are good, right, to a very great extent for you to have about 5 straight wins. And the truth is that you do not know how to manage your risks. This thing has actually happened to me before. At times I go like 9 straight wins, and then just one trade take about one and a half of my all calculated profit off. And then I begin to blame myself. I begin to say, okay, what's happening? And then I started noticing these patterns in my journal, right? I started noticing this pattern, and all I had to do was to sort for help, right? And when I sorted for help, my friend, she pointed out where exactly this issue was coming from: risk management. You see, risk management is something you need to understand, and it does not matter how good you are with your technicals. If you have a very bad risk management, you are always going to end up at the losing side of Forex. But even someone with average knowledge of its technical will always end up being profitable in the market, right? Someone with 40% win rates can end up being profitable in the market. Someone with even 30% win rate can end up being profitable in the market. And someone with 90% win rate can end up being unprofitable in the market. So it's all about the risk management, not just about technicals, right? So let us talk about proper risk management, how you can implement it, how it can work for you, and how it can make you become way too profitable, right? So I'll be using different accounts to explain this, right? So I'll be using this one of my accounts, right? It's a prop firm account, and I'll be using it to explain what I'll be starting with this today, right? So now we have about 15,000, right? 229, right? So I have 229 profit on this particular $50,000 I said account, right? And this is how you have to do your risk management. I will be explaining to you, and I will be explaining how you should actually look into your risk management, and a risk management that will make you become profitable in the market. So let us go ahead and let me explain it to you. Now, one thing you have to consider first is how many trades can I pick on this particular account that will make me lose this account. This is the first thing I ask myself, right? So I come around. Okay, let's start from 15,000 because that's where this account started from, 50,000.77. So it will be much easier with our calculation, right? Because I don't want to use calculator right now. So let us use 15,000, right? And I come. 15,000 is my account, right? I have 15,000 US dollars account, and to the trading rules, it says I can only afford to lose $1,500 from the initial capital, which is not bad, right? That's 10% of the initial capital. So now the question is, how many trades will I pick to lose this particular account? That's the question I should be asking myself. How many trades will I pick to lose this particular account? So if I ask you, how many trades will you pick to lose this particular account? Now let us do it somehow. Let us do it this way, right? Let's say I pick 10 trades, right? If I pick 10 trades, now losing this particular account with 10 trades means for every single trade I pick, right, 1 to 10, I lost all those trades. 10 trades straight. That means I have 10 losing streak, 10 trades losing streak. That's not possible, right? If you're good with your technical, you probably can't have 10 trade losing streak. Probably you can have a good number of them, but then you win at the middle, you win, you lose, you win, you lose, you win, right? But if you are not good with your technicals, probably you can have 10 losing streak, all true. But right, if you have a very good knowledge of your technicals, I don't think 10 straight losses is actually, at least you win probably 2 or 3 inside, which will still keep you in check, right, until you get your momentum back. So 10 trades means I can only afford to lose 1% per trade, right? 1% of this account per trade. So what is 1% of my account per trade? That is $150, right? So to be profitable, I actually want to make money and I don't want to lose too much out of my $15,000 account. So I'm going to look at, okay, I've made up my mind that on this particular account, I want to pick 10 trades. And anytime I lose 10, I add 10 straight losses, I'm losing this account, right? 10 straight. I didn't say you lose 10 trades. I said 10 straight losses, I'm losing this particular account. Right, that I've had that at the back of your mind. That means I'm risking 1% per trade, right? So if I lose 10 trades, it means I will be losing $1,500, which means I've blown this account. All right. But then on each account, on each trade, I can only afford to lose $150. That's simply what it means, right? So if I made this at the back of my mind, some people can't say, some people can risk $150, right? Some people will say, I want to risk $75. That means you are risking 0.5, right, of your account. Well, I can afford to risk $150 because 10 trades, I don't think I can go 10 straight without actually winning 1 or 2 or probably 4 or 5 of my trades, right? Of course, I can. I should be able to win 4, 5, 6, 7. It does not really matter. So far, you have wins in between, right? You can lose 7, you can win 3, you can win 6, you can lose 4, you can. But then until you get, even if you are losing 8 and you want to, it will still keep you in check, right? To a good extent until you get your momentum back, right? Because there are times, you just face these challenges in the market that you actually have to cut some losses, and then there's times you are on the edge, you're actually doing pretty well in the market. So risk management will keep you in shape, it will keep you informed even when you are actually losing in the market, right? So let us look at this. So we've agreed that I'm going to lose $150 per trade. So losing 10 trades means I've blown this account, right? So let us look at the next stage. Now the next stage is, what is the RR you are actually using? What is the risk reward ratio you are using? So I actually advise that any trade you are picking, make sure the trade is worth 1:2.5. What does 1:2.5 mean? So it means for every one you are losing, you are winning 2.5 extra, right? For every one pip you are risking, you are winning 2.5 pips extra. For every $1 you are risking, you have the possibility, right, to win $2.5 extra. Now let us bring it into the perspective of pips first. Now I will say, if I'm using a stop loss of 20 pips, we're still going to talk about the stop loss later. If I'm using a stop loss of 20 pips, right, that means my 2.5, right? I said I can actually afford to lose, I can afford to lose 20 pips, and then my possibility of making profit minimum least should be around 2.5. So 20 pips, right, loss, right, and then 2.5 profit. So let us look at 2.5 profit will be 20 times this, that will be around 50 pips, right? So if I am losing, right, if I'm losing 20 pips, I can make 50 pips. That's simply the calculation for this. So I can afford to lose 20 pips, and I must take a minimum of 50 pips out of the market. Now let us look at what if I have a very tight stop loss. I have people that use 10 pips stop loss, in fact 5 pips stop loss. So if you are using 10 pips stop loss, it means you can actually you should be looking into making 25 pips profit. Yeah, you are risking 10 pips, you are making 25 pips. That's minimum of 2.5. I didn't say minimum of 2, because I would like you to see some things later on. I'm putting it's a challenge. You must be good with your technical, so do it at minimum of 2.5, right? So even if you cut losses, it will actually manage it at a point in time, right? It will help you manage your losses, right? So use minimum of 2.5. Now, it means if you are risking 10 pips, you are actually proposing to make 25 amazing pips, right? So we've done it in terms of pips. Let us don't do it in terms of amounts, right? In terms of dollars. So if I'm risking 1%, which is my account now is saying I'm risking 1%, which is $150. How much will I be making back, right? I'll be making what? I'll be making times 2 is 300, then 75. I'll be making $375 back. So if I'm risking $150, if I'm risking $150, I have the possibility of making minimum of $375, right? So if I'm risking $100, let me just give this as an example. It means I have chance of making minimum chance of making $250. Just program yourself to minimum of 2.5, right? Minimum of 2.5. Some people has programmed themselves to minimum of 3, but try and program yourself to minimum of 2.5. Right. So let us look at another perspective, right? And the perspective says, what if, now look at this. Yeah, I said minimum of 2.5 does not mean you can actually risk more. So it does not mean you can actually gain more, but your risk must remain as 1%. So let's say my risk is all stay at 1%, and I got a trade of 1:5, right? Let's now say I risk 20 pips, and that means I'm going to make 100 pips, right? Now let's now say I risk $150, right? So what is 150 times? Okay, so it will be that should be 300, 600. That's $750, right? So it means for 1:5, I'm risking $150. I'm making $750. I'm risking 20 pips. I'm making 100 pips. So you see the similarities between these two. These two very soon. Right. Now, let me give you one more example, 1:4, right? We said minimum of 2.5, but then we can actually make more if we see the opportunity of making more. So 1:4 means probably I'm reaching 10 pips, right? And I'm making 40 pips back in return, right? So I'm reaching $150. See, my $150 still remains the same because I'm using account of what? $15,000. And I'm making back what? $600, right? $600. It's as simple as that. See, my risk does not really affect my pips, does not really affect my earnings. Regardless of the number of pips, we are still going to end up making almost the same amount. So let us now do the main calculation, right? Now, what I do is I go to what I call it position size calculator. So this is what I will actually advise you to do, right? Let me take you back to my Google. So I come on Google, right? And I know there's an indicator, right? You can actually use for this, but I prefer using the simple form because it is quite simple to use on. So I will just type in position size calculator, right? I'll type in position size calculator, and I prefer to use the one of my FX book. So I'll just click on my FX book, right? And it will bring it out for me. All right. So let's check. Now, this is position size calculator. And now, very easy to use. Very, very easy to use. You don't need to stress yourself. You don't need to disturb yourself. It is very easy to use. Now, what currency pair am I trading? I'm trading Euro USD right now, right? What is my account size? My account currency is in USD. Now, what is my account size? My account size says I have 15,000 US dollars account, right? And what percentage do we agree on? 1%. And 1% means I'm losing $150, right? So I'm risking 1%, right, of my account. Now, what is my stop loss? Now, this is now depends on your technicals, right? You know, earlier on we used stop loss of 20 pips. So let's assume I'm using a stop loss of 20 pips. I want to show you one thing that is very important right here, and you need to focus right now. So 20 pips, right? I'm using 20 pips. And look at this. Currency pair, I'm trading Euro USD. You can actually change it, but then for now we are trading Euro USD. Currency, account currency USD, right? You can change it. That's depending on the account you are using. Account size, of course, I'm using $15,000 account. And what percentage can I reach on my $15,000 account? I can only reach 1%, which means I'm risking $150 per trade. Now, what is my stop loss? It depends on the technicals. If your stop loss is saying 30 pips, put in that 30 pips. It does not matter. Right now, this thing we calculate the lot size you should use. Now, this trade size lot, just leave it at one. So just click on calculate. Now, look at it. Look at what he asked us to use as our. You are risking $150. So if you cut loss on that trade, it means you are losing $150. Look at sizing. This is the lot you are going to use to trade. So if I want to open a position on Euro USD now, I'm going to open 0.75. Now, notice something. Notice it didn't say reward ratio. It only asks for risk ratio, right? Now, reward ratio is all dependent on you. That's why I said try as much as possible to take what 2.5 of your risks, all right? Try as much as possible to take 2.5, minimum of 2.5 of your risk. Now you can go ahead and take 10. Now let's assume our percentage risk is 3. Now we have 1:3. That means we are risking 20 pips to get 60 pips, right? I hope you understand. 1:3. And our 1:3, sorry, 1:3, and our 1:3, and our stop loss is 20 pips, right? So our take profit will be 60 pips. Now calculate this. You are now using 0.75, right? You are using 0.75 load. That is what the calculator asks you to use. Use 0.75. Now this 0.75 simply means if I am risking $150, I will be making, and I'm using 1:3, right? I will be making what? I will be making $450 per in return. So it means I can afford to risk $150 with this my 20 pips, and I will be making with this my 60 pips $450. It's as simple as that. Now I want to show you something very, very important, that it does not matter the lot size stop loss you are using, right? The tighter the stop loss, the better it is for you, right? Now, but what if I can afford to use a tighter stop loss, right? Like some people use 10 pip stop loss. Now let us see what it will do. Now, if you are using 10 pip stop loss, right, your lot is going to increase. Can you see? So even if you are still using 1:3, your risk is still the same, $150, right? And you are still going to make $450 with this lot size is recommended for you. With this lot size is recommended you are still going to make $150, lose $150 and make $450, right? It is just like that. Now let's assume, let's quickly do a quick calculation, right? Let's assume you have your first trade and you won your first trade. So it means we are adding $15,450, right? So the next trade you are picking, right? Oh, this trade is actually not the best trade for me, but I can only use 30 pip stops, right? Because that is what I'm seeing. The opportunity I'm seeing is 30 pip loss. Now my account is no more. Look at the principle of compounding now. My account is no more 15,000 because I won the first trade. Now it retained. You are not using. Okay, let's even say you are still using your 20 pips. So I can show you something. 20 pip stop loss, right? Now, but my account has changed because I won my first trade. My account has changed. I'll just calculate. Look at the next lot you are using. See the principle of compounding. It has increased to what? 0.77 load. And your stop loss has increased to what? 1% of your account. Still 1% of this account. Right? So if you keep doing like that, now if assume you lose a trade, you are going to lose out of this profit. That means you are losing 1 minus 154. That's what you are losing. Minus 154. 692. Right? You are still going to be profit. This is all right. So this is exactly what happened to my account that I'm showing you right there. So I was in profit initially, and then I took a loss, right? And where is it? Okay, yeah, that is how I was able to get this, right? With the risk, that is why you are seeing 200. Yeah, so it is just it's just like that, right? There's nothing big about this thing. You just need to understand it, right, and implement it. Now, what if I'm not using a profit account? What if I'm using, let's say, $500 account? I still use the same principle, right? What if I'm using a $500 account? Well, sorry. Let me share my screen. Okay. Okay, so what if I'm using a $500 account, right? What if I'm using a So what if I'm using a $500 account? What if it's not prop firm? Right? I'm not going to go about it. It's still the same principle. How many trades can you pick? And when you lose all at all, you are going to blow this account. That's what the first question I asked. And I want to make money. This is what I do. On this part, I give myself 10 trades. All right. So on this particular account, I say, if I lose 10 trades, I'm going to blow this account. So and I have to distribute this 10 trade equally through this account. So I say divided by 10. So I have $50, right? So I can only afford to lose $50 per trade. And if I lose 10 on a streak, I'm actually going to blow this account. This is how we do it, right? This is how you should consider it. So if you lose 10 on a street, you are losing $500. So now I've made up my mind that, okay, I'm risking 10, 50 or 500 is 10%. On this particular trade, I'm risking 10%, right? So let's use Euro USD as example again. And you will see now I'm risking 10% of my account. Why am I risking 10%? Of course, I will risk 10%. Why? Because I want to make money too. So it means on every single trade, I'm risking just 10%. I'm losing $50, right? What's my account size? My account size is at $500. I want to show you something. What if my stop loss is 30 pips? Oh, the only thing that will change is your sizing, lot sizing, right? Lot size will change, right? The stop loss 30 pips does not really matter. So let us just do this. Now look at this. It said on my next trade, I should use 0.17. So I'm using 0.17 lot on my next trade. Now let's assume I win this next trade, right? I was able to cash, let's say I was able to cash 50 pips on my next trade. I was able to pick 50 pips on this particular next trade I'm about picking. So it will be what? $85. That means I've made $85. So I'm going to come back here and add $85 to this particular one. Now, why is it like I'm making $85? Now, what if I make $85 using 30 pips? What if on the same account, I'm using 20 pips? You see what will happen? And I want to make 50 pips back. So he said I should use 2.5 lots. Now, look at the difference. So the only thing that should be changing is your stop loss region, right? Now, I'm using 20 pips, right? Stop loss now, and I still want to make that 50 pips back. So it will be 0.25 times 50 pips. So that means I'll be making 125 back. Now, look at in this scenario, the TP for all is 50 pips. Right now, look at someone that is now using 10 pips. You see that the difference is in your what? Stop loss. Your stop loss risk is what? Is the one that makes the difference here. He said 0.5. So 0.5, that's $250. Right? $250. Can you see the difference? All right. Yeah, it's $250. Right? So the tighter your TP, the more lot you can use. This thing is very important. Please, I'm begging you in Christ's name. So if like assume I use this first one, right? 30 pips stop loss, and I've won the trade, I will just come back here and next trade I put 585 because I've increased my equity, right? I will use 585, and probably my stop loss still remain 30 pips, right? Sorry, 30 pips. And I say if you calculate, look at it, it has changed. Look at the power of compounding. All right, calculate. Initially, I was using 0.17. Now I'm using what? 2.0. So if I make another 50 pips, that is $100. Now $100 plus, I will now be in what? 685 in two trades, in two trades, 685 in two trades. So I'll say calculate again, 30 pips again. Look at it. Another one, 0. See, this is the principle of compounding. It's how you gradually compound, and all of a sudden you are becoming a big man, right? And if you could do it, right, why you probably start with 30 pips, and then you could find a better edge in the market, and you reduce your stop loss to 20 pips. Of course, you good. You have a chance of making more, right? So please, if you implement this, right, just pick 10 trades, straight 10 trades, and use this format. You see that, man, something big is going to happen to your trading career. Lose 5, it does not really matter, because you are still going to be in profit. Lose 6, it does not matter. Lose 7, it does not matter. Most likely you are going to end up in profit if you stick to minimum of 2.5 weeks reward, 1 ratio 2.5 weeks reward. You are still going to be in profit. All right, thank you. I hope you enjoyed this video. See you next time.